Hey everybody, it's Calvin Ryan with your daily video here today. I'm actually going to go over today's trades and yesterday's trades all in one video because we've only got a couple of them. So let's get going here. The first trade of the day that I took was the EuroCAD trade. I just got out of this for about 50 pips, and let me show you why I took the trade. First of all, I was looking for support on the EuroCAD trade. The time was around noon today, so it's very rare for a pair to trend much longer than noon before reversal, and that was the first thing. So we had the timing factor in there. But the other thing was we had a major level of support over here. So let me draw it on the chart. You have a low there, and then you have another low here. This looks like a market maker stop run. So the market did go just a little below it. That's why I put my level over here to a little bit higher because it looked like a stop out to me. Not only that, but you are your daily S4. So I literally got in a couple pips from the bottom down here, and then once it started to take off, I just let it run, and I let it go just shy of the daily S3. And if you were in this trade with me, you should have certainly gotten out by S3 because that's going to be a very probable bounce area for the market to reverse. In fact, if I were to draw a line here, you have support here, and support here. So this is a very strong level, and that's why I got out up there. So I did take that for about 50 pips. And if you go down to, let's see, the 5-minute time frame, the other thing that I noticed is during the London session, we had one move down, a pull back up, second move down, pull back up, third move down, pull back up, and the fourth move down. So this was the fourth wave in the trend. So it was very likely that it was about to reverse there. And I even drew a trend line here connecting the lows. And I'll show you what we had here. First low, bounce, second, bounce, overextended a little bit. Why did I draw it here? Because you had it respected down there. So you got 1, 2, 3, and then right around this area was the 4. So we were actually a little overextended by the time we got down to the daily S4. So I was pretty confident on the trade there. And if for some reason that wasn't going to work out, there was a huge level just a little further down. And let me show you that here. It'd be this level right here. You have a double bottom over here from December 15th and December 16th. So you had great support, but it was unlikely that it was going to reach down that far because, like I said, it was already noon. And that's why I was more than willing to take this trade. So very good trade for 50 pips today. The other trade that I did not take today that should have been on your radar was actually the Euro odd pair. I did get up a little late for this, so I missed the trade by a few minutes. But the level should be popping out at you very strongly here. So let me draw it on the chart. You had a bottom here on December the 18th, and then you had a bottom here on December the 22nd. So we came right down into that today, which happened to be the daily MS2 level as well. And you did see, let's see, $1.50.58. You did see a bounce up to $1.50.80. So about a 22 pip bounce, which is still pretty good on this. You're talking almost 2 full grid bars. So that's plenty of profit. Why would you get out of that level? Well, let me show you. I always get out at other areas of support or resistance. So if you draw a line there, you have a double bottom level of support here. So of course it came right up to the pip before reversing back down. You would have got stopped up for break even if you did not take your money off right there. This was a great bottom, but I'm very hesitant to take a second hit of a level. So just keep that in mind. For that reason, I did not get in. Because I actually woke up around this time, and I thought about taking it, but I'm like, I better stick to my rules, and I didn't take it. Had I taken it, though, as you can see, you would have made about 50 pips of profit on that. So that was the other trade for today. Going into yesterday's trades, I took a euro-dollar trade. This was a little bit trickier. If you're a newbie, you probably wouldn't want to take this trade, but I took it, and let me show you why. First, let me zoom out to the 30-minute time frame. It was around noon, and as you know, it's very rare for something to trend much after noontime. So when I saw it respecting both sides of this trend line, one run up, 2, pull back, 3, pull back, 4th run up, and we were hitting the upper end of the trend line here. And you also had a pretty good level right here. If I scroll back a little bit, you can see it respected it there. And then right here, the candle top. So this was actually a very strong level. It was also the daily R1 level. So I was willing to take a shot up here, and there was another secondary level up here. So I took a trade right here, and my plan was to allow this to run down to about the 109.35 level, which was the daily pivot. 109.35 was about right. Let's see, right there. That was my goal, but we got into this trade. It stopped down here, and we literally consolidated sideways for about 4 or 5 hours during the Asia session, Sydney session, and I really lost patience right here, and so I took it off the entire position. I bought some up here, and I bought some up here. I took off the entire position right here. And as you can see, right after I took it off, we cascaded lower and we hit the level that I was looking for all day. And as you can see, it actually trended lower the entire entire London session. And we just got a reversal today during the New York session. But nonetheless, still a pretty good trade. Didn't do exactly what I wanted it to do, but it still, made some good pips. So I was pretty happy with it. Again, you had major area of resistance, R1. You had your trend line right here. So the timing factor in this trend line was really the main reason why I got into the trade. So just remember to keep track of your time here. The other trade, which was very frustrating to me, was the pound CAD, because I came like literally 2 pips away from getting into the trade. My level to get in was 15, which was right there. It came down to 17 and then reversed up. If you go to the 30-minute time frame, this is why I got into the trade. You had a major level here, 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 here. Why did I choose 15 over another level? Well, this bounce was at 15. That bounce was at 15. So it seems like the major level there was 15, but you did have a level down here at 8, and then another one down here at 206. So 15 was the level I was looking for. I was not able to get it, unfortunately, so I did miss out on that trade. But if you take a look here, it did go from 17 straight up to 60. So nearly a 50 pip run in the matter of just a couple hours here. I'm kind of sad I missed it. It did come back to test support here before running up about 150 pips during the Asia and London session, but I would be more than happy with 50 pips. I usually don't go for more than 50 because a lot of times you'll just see it reverse and you'll get stopped out. But anyways, that was the pound CAD trade. Again, major area of support, December 15th, December 16th, and December 17th. So, and again, the bounce off of that was huge. So you absolutely can be certain at the right time of day, this is definitely going to respect that level and bounce. And, we did see that. So that is why I took the pound. Well, that's why I was looking to take the pound CAD trade. So that's all I got for you today. If you have any questions or comments whatsoever, please don't hesitate to contact me, and we will see you on the next video. Thank you for watching.